In this video, you will learn how beginners are building wealth in 2026 without taking big risks. What if I told you, you don't need big risks to build real wealth? Most people think investing is all about timing the market, chasing hot stocks, or getting lucky with crypto. But in 2026, something interesting is happening. Quietly, beginners, people with normal incomes, are building real consistent wealth without taking dangerous risks. And the truth is, they're not smarter. They're just following a different system, one that most people completely ignore. Let's clear something up first. The biggest lie in investing is this idea that higher risk always equals higher reward. Yes, risk can increase potential returns, but for most beginners, it actually leads to one thing: inconsistency. You win big one time, lose big the next, and over time, you stay stuck. The people quietly building wealth today are doing the opposite. They are reducing risk, simplifying decisions, and focusing on consistency over excitement. Because in investing, boring is usually profitable. So what are these beginners actually doing differently? They are focusing on three simple things: consistency, diversification, and long-term thinking. Not complicated strategies, not predictions, just repeatable actions that compound over time. Think about it like this: instead of trying to make fast money, they are building a system that makes money slowly, but almost automatically. And that small shift in mindset changes everything. The first thing they do is invest consistently, no matter what the market is doing. Instead of waiting for the perfect time, they invest weekly or monthly. This is often called dollar cost averaging, but the idea is simple. When prices are high, they buy less. When prices are low, they buy more. Over time, this balances out the cost and removes the stress of trying to predict the market. Most people don't fail because they lack knowledge. They fail because they hesitate, they wait, they overthink. But consistent investors remove emotion from the process. They don't guess, they follow a routine. And over years, that routine turns into serious growth. The second thing is diversification. Instead of putting all their money into one stock or one idea, they spread it across multiple assets. This could be index funds, ETFs, or different sectors of the market. Why does this matter? Because no one can predict which investment will win. Even professionals get it wrong. But when you spread your investments, you reduce the chance of losing everything at once. It's not about hitting the jackpot. It's about staying in the game long enough to benefit from overall growth. Think of it like this: instead of betting on one horse, you own the entire race. The third and most powerful habit is long-term thinking. Beginners who succeed are not checking their portfolios every day. They're not reacting to every piece of news. They understand that wealth is built over years, not weeks. Markets go up and down. That's normal. But over long periods, they tend to grow. So instead of panicking during a drop, they stay calm and often continue investing. This is where most people fail. They let short-term fear destroy long-term progress. Imagine two people. The first person tries to time the market. They buy when things are rising, panic when things fall, and constantly switch strategies. The second person invests a fixed amount every month, spreads their investments, and stays consistent for years. At first, the difference doesn't seem big, but after 5 to 10 years, the second person often ends up far ahead, not because they took bigger risks, but because they avoided costly mistakes. So here's the truth most people don't realize. Wealth in investing doesn't come from intensity. It comes from consistency. You don't need to chase trends. You don't need to predict the future. You just need a simple system and the discipline to stick with it. If you start thinking this way, investing becomes less stressful and a lot more powerful, because the real goal isn't to get rich quickly. It's to build something that grows even when you're not paying attention. And that's how beginners in 2026 are quietly building real wealth.